Hey guys, Jared Wesley here of Live Traders, and it is that time of the week. It is lecture time, and this one is very appropriate for what's going on right now, guys. It's how to navigate a bear market, but more importantly, how to navigate this bear market. I'm getting lots of emails from people that are their heads going crazy, like, Jared, what should I do with my investments? Jared, what should I do with my trading? The market just keeps going lower. Oh my gosh, oh my gosh, oh my gosh. One, woosah, breathe, pump the brakes, man. It's not the end of the world here, okay? It's going to get a lot worse in the markets, in my opinion, but still not the end of the world. So today's lecture is about how you can not only navigate these markets through your investments and how to better take advantage of these markets. It's also going to relate it to trading as well, how you can better trade these markets. Because I think a lot of people, they only make money when the market goes higher, which, don't get me wrong, the market goes higher about 75% of the time. And over the last 40 some years, it's been more like 80% of the time. So that's good. But you need to learn how to make money in all markets. And you also need to learn how not to freak out when the market does what it's doing, when it drops 20, 30%, just relax. There's a huge, huge opportunity out there for intraday trading, swing trading, core trading, and long-term investing. So today, I'm going to talk about all of those things. All right, so if you like these videos, please click that like button, smash, hammer that subscribe button. I am Jared Wesley of Live Traders. Let's get to it. Let's dig in, all right? So this week's lecture topic is how to handle a bear market, okay? Now, I don't know what it is. Perhaps it's human psychology, human nature, but when things go red, people go crazy, okay? It's just the way it is. And instead of looking at the situation as an opportunity, whether it's an opportunity to make money, whether it's an opportunity to learn, just experience something different, most people's emotions get the best of them, and they end up doing really foolish, silly, and honestly stupid stuff. So this lecture is about keeping you from doing stupid things, particularly in bear markets, honestly in all markets, but especially in bear markets as it relates to intraday trading, swing trading, core trading, and investing. We're going to talk quite a bit about investing today as well as it relates to this particular market that we're in. And I thought that this is probably an appropriate time to do that because the markets are down at the moment 20 to 30%, depending on the index you're talking about. If you're talking about the NASDAQ versus the S&P. In fact, yesterday's close, we were down 32.6% in the NASDAQ. So people tend to go a little crazy. But before we get into the bear markets and how to navigate them, we must first talk about when will the insanity stop? When will the insanity stop? I've lost all my profits over the past month, and it's made me an emotional trader. No, and no again. You lost all your profits over the past month because you were an emotional trader. Do you see the difference there? Do you see this type? This person, even after the fact, can't even understand themselves. And one of the biggest rips or one of the biggest problems in trading is self-reflection. Most people are so unobjective, they can't be honest with themselves, so they'll never fix the problem. You know, you always talk about DABDA, right? The first step in DABDA is denial. You are in denial, young man or young person, right? I've lost all my profits, and it's made me an emotional trader. No, the emotions are what made you lose all of those profits because you made foolish decisions. So at the beginning of February, I was up nearly 500% since December 1. I don't know how that's possible for a new trader because you shouldn't be risking that much money. But anyway, hit home runs in ad tech with apps, MGNI, Perry, others, blah, 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 blah. Okay? During this correction, I've lost all my profit and then some. You lost all your profits in 1 month. What does that say about this person's money management, about their trade management, about their approach to the business? Think about that for a second. If you are in a position to lose 500%, because that's what this person said, I was up nearly 500%. I'm just going off what they said. For you to be in a position to lose 500% in a 1 month period, you are a gambler. You might as well go to Vegas. It's more fun, right? You're going to have a better time. So you have to ask yourself, did this person even have money management or trade management to begin with? The answer is likely no. All right. So the point simply here is I don't know how much this person lost. Okay. They clearly didn't say. But this is too many people. Every week we see somebody doing something foolish like this. So in my opinion, this person was only up 500% because they were a gambler, and they lost the 500% because they're a gambler. So you know when I tell you guys don't spend that money because the market wants it back, that's what I mean, right? Don't spend that money because the market wants it back. Because you made it the wrong way. It's ill-gotten gains, so the market's going to take it back. All right, so now what I want to do is I want to take the flip side of this, and I hope Jeff Yates isn't upset with me because I think this person, I don't know if they're coming on the mic later or not, but this person is in our chat room today. I believe they're present today in the chat room. So Jeff, I'm not trying to steal your thunder, and I apologize. I wanted to throw this in because we talk a lot about negative aspects of when will the insanity stop. And every once in a while, I thought it would be good once a month, and I've done this a few times before, to throw in a positive story, right? So Lonnie here, some of you know him from the chat room, okay, just wanted to say thank you for teaching us how to do credit spreads and more about options in general. I've been in your program for 10 months or so, okay? Made $8,385 trading credit spreads in May, okay? So this is just from a customer who said, hey, Jeff, I just want to say thanks. You know, again, we do a lot of hammering people for all the bad things that they do, right? All the poor decisions that they make. But I think it's only appropriate to show the good side of things too, right? I mean, I think for us here at Live Traders, it's more like 100 to 1 bad to good, right? I mean, I show so many when will the insanity stops to get you guys to appreciate that money management is your number one job, that this business is F you hard. But if you manage your money, you will be okay because you'll never be in a position to blow up your account if you're only risking $5 a trade, right? And this person, as you'll note, said, I have been in your program for 10 months. And now he's finally starting to raise his risk. 10 months. That's the way you're supposed to do. You're not supposed to just come in and go crazy with your risk. You have to build up, okay? You have to build up to that level, all right? You have to build up to that level, okay? So, congratulations to you, Lonnie, and to the person before on the other page. Money management's your number one job. Money management's your number one. But there's Lonnie. How you doing, buddy? So yeah, Jeff will talk a little bit more about this because Jeff is the credit spread guru, and this is what I mean by stick around for 12 o'clock. All right, you're at 16K now. Good for you, man. Good for you, Lonnie. So anyway, 12 o'clock, Jeff's coming on. Stick around for that. You want to learn a little bit about stocks and credit spreads? Jeff will be talking about it. So last week, and I like to do this from time to time, we talked about retest buy setups and double W bottoms, pivots and retests. And this is a very common pattern, but they're very different. So last week we spent the whole time talking about the differences between these two setups because a lot of people think they're the same. Just because they have a retest or a double bottom, it's like, oh, it's the same. It bounced, it retested the prior pivot. Oh, it bounced it. It's not. We talked about that last week, so I'm not going to rehash it. But I'm saying this because you must understand pivots and retest, specifically pivots, retest second, right? Because you have to have a pivot to have a retest. So if you don't know what a pivot is, you'll never know what a retest is. So pivots are more important than a retest so that you can understand what a retest is. How does this relate? Where are you going with this, Jared? Where I'm going with this is when you look at the stock market, this is what you're looking for. You're looking for pivots and retests, okay, when you're looking at stocks. But today's focus is the market in general. Right? We're going to look at the broader markets today, all right? Not just an individual stock today. So you need to understand these. So last week's lecture, if you were there, good, because now you understand these things. If not, then you need to get on point with that. So one of the things we talk about are buy setups, right? Buy setups are pivots. That's basically what a buy setup is. A stock moves up, it pulls back to a specific or a certain area like minor price support, rising moving average, 50% retracement, etc. And this is the goal, right? You see it rip, pull back, and bounce. I mean, and this didn't just bounce. This ain't bounced, right? This is what we're looking for. Where are you going with this, Jared? Yeah, duh. We know what a buy setup is. Okay. Well, then if you know what a buy setup is, then why are you so crappy at your swing, core trading, and investing in bear markets? Nothing goes straight up forever, right? You've seen it in professional trading strategies. Up 3 bars, think sell. Up 4 bars, really think sell. Up 5 bars, really think sell. So up 6 bars is like really, and then 7 bars, what goes up also pulls back. So why then, the general question is, if this is what we do on intraday trades, core trades, and swing trades, why when the market does this portion of the trade, when the market does this portion, the red portion, why do you guys all lose your shit? Why does everyone go nuts? And I don't mean necessarily you specifically, but the general world goes crazy when they see red in the market. Why? It's part of going higher, right? So we're going to talk about that today. Okay? If we do this with stocks and expect them to go higher, then why are you so fearful when the overall market does the same thing? I don't know, Jared. I don't know. Because it's my life savings. And? So I'm going to show you something later on. We'll get to it later on. I don't want to make a big deal of it now. I'll make a bigger deal of it later. Okay? There is not a single person of legal age listening to this that can say the Dow, S&P, or NASDAQ was lower the day they were born than it is today. Is there anyone out there? Can any one of you listening to me now raise your hand and say, Jared, you're wrong. The Dow was actually higher the day I was born than it is today. Is there anyone listening right now that can tell me that? Factually tell me that. The answer is no. There's not a damn person listening to this that can tell me that from the day they were born to today that the Dow, S&P, and NASDAQ is lower than it is today. So what is wrong with you guys? It's insane how fearful people are. You want to know why the average person is dead-ass broke? Well, one, because they spend too much, because America's a consumer society. You got to have a new Nikes and iPhones. But that aside, is because they are piss poor at investing. They're not just bad with money. They spend too much of it. They don't do anything with the money they have left over. And when they do the opposite of what they're supposed to do. They sell when they're supposed to buy, and they buy when they're supposed to sell. So yeah, don't blame the government why you're broke. Don't blame your neighbor for why you're broke. Don't blame your level of education for why you're broke. Don't blame anybody but yourself for why you're broke, especially if you're here listening to this today, because you're listening to this today. Okay? So why are so many people scared of the market? If the market is higher than it was when you were born, why are you so scared of it? What's wrong with you? Wealthy people don't fear market pullbacks. They relish market pullbacks. They look forward to them. They get to buy a lot of stuff on the cheap from people who are scared or didn't save for a rainy day. Guys, rich people aren't necessarily geniuses. Back in 2007, 2008, did you need to be a genius to realize that there were some really good deals out there in real estate? Did you need to be a genius? Nope. You just needed to drive through any neighborhood and go, wow, that home was 500 grand, now it's 150. Maybe I should pick it up at 150 grand. Oh, wait, I'm broke. Why are you broke? Because I'm terrible with money. Why are you terrible with money? Because no one ever taught me. Facts. All these are facts. Sure, there are a segment of people that perhaps lost their job and this and that. But the truth of the matter is, most people do the wrong thing all the time when it comes to money decisions. I'm speaking about money. They make poor financial decisions most of the time. Okay? Yes, they are, Sophia. They're the greatest transfer of wealth because rich people have money when no one else does. And if you want to reverse that cycle, guess what? You need to plan 5, 10, 15 years out and go, this is going to happen again. Not it might happen again. It will happen again. It's not probably going to happen again. It's definitely going to happen again. And in your lifetime, you're going to get 2 or 3 major opportunities to take advantage of it. 2 to 3 major opportunities in your lifetime. The people who are smart and know 10 years from now, 15 years from now, heck, right now, are going to be in a position to take advantage of it. And the other people will not. Because when times are good, they got to have the extra pair of Nikes and 3 iPhones. Every kid's got to have the newest, latest version, because God forbid they have an iPhone 7 because all their friends have a 13. Well, that's just dumb. That's just dumb. I consider us extremely lucky. Why? Because we're getting 2 in a 15-year period. We got one in 08 and 09, a pullback, and we're getting one right now. And you could also ask COVID, when the market dropped 20 or 30% in a month or more, we almost have 3. How lucky are we? No, not how unlucky are we. How lucky are we? We're super lucky. So, let's talk. As of yesterday, the NASDAQ was down 32.6% in 2022. This is a weekly chart of the NASDAQ, okay? So, that's where we are. Today we're a little bit lower than that. Not much, 50 cents. We're about the same spot as we were yesterday, right now. Okay. How are you handling these markets? Scared? Fearful? Complaining I can't get anything to go my way? Or are you looking at this as massive opportunity, right? You're looking at this, and the market moved up for the last 2 years straight up. We had this COVID pullback from like 240 all the way down to like 170, whatever it was. Rips, and now we're putting in what? Lower highs, lower lows, lower highs, lower lows, lower high, lower low. This is a stage 4 downtrend. Stop losing your shit. Start waking up to why people who have money have it. Okay? I don't want to hear your sneer comments about, oh, they cheat. No, the average millionaire doesn't have $1 billion, and they don't work on Wall Street. The average millionaire in America is just an average person. Okay, so don't give me that crap. All right? You want to talk about the super elite? That's another conversation for a different time. But if you want to have $1, $2, $5, $10, $20 million in the bank, they're not doing it the Facebook way. They're not doing it the Apple way. They're doing it the other way, which is smart with their money investing in the markets and real estate. Okay? So that's where we are. Now, I want you to look at something else. I've taken this out right here, and I want you to just look at it. This is stock going up, higher highs, higher lows, higher highs, higher lows. It pulls back, then it rips right here, okay? Consolidates, big red bar comes in, and then it rips, higher high, higher low, higher high, higher low, right? So, there's nothing on the right-hand side. There's nothing on the bottom. Why? Because it doesn't matter. It doesn't matter. Okay, the chart's the only thing you care about here. So this is a buy area. 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 See this consolidation right here chopping away? And this is a bigger buy area. This should probably be a little bit higher than that, but you get the point. The bottom here. This whole area, basically, from here to here is a buy area. Okay? Buy area, buy area, buy area, buy area, buy area. And you're going, Jared, that looks a little strange. Why are you buying at the bottom of the pivot instead of when the buy setup triggers? We'll find out in just a second. Okay, why are you buying at the bottom of the pivot instead of when it triggers the buy setup? We'll talk about it in a second. So these are 4 to 5 buy areas. They're not exact pennies. These are $2, $3 areas. Okay? Huh. Oh my gosh. That's the NASDAQ. That same chart you just saw that I took the numbers off of and took the dates off of is the NASDAQ. What did any of you do about it? Nothing. Nothing. Not a damn thing. You hid for the hills and hoarded your money in cash. Why? Cash is worthless, especially back then inflation wasn't high, but now it is, and cash is going backwards when we have high inflation. But even during low inflationary periods, cash is not all that valuable, okay? It's not all that valuable, all right? So did you buy some at 48? the Qs. You could use the SPY. You could use IWM. I don't care which one you use. They're going to be similar. Did you buy some at 44? Did you buy some in the 41 to 42 range? Did you buy some in the 34 to 35 range? Did you buy any of it? The answer largely for the vast majority of people listening is no, because I was scared shitless. Or I was broke and didn't have any money. Think about that. I was scared or I was broke. And you got to ask yourself, why you're at both of those positions. Why were you scared and why were you broke? You listen to too much TV, man. Oh my gosh, Bear Stearns is going on. The market, the world is ending. And maybe we did get close. Maybe. Okay? So now you got to ask yourself, what happened? What happened? Well, the markets hit every one of those buy points. Okay? The markets hit every one of those buy points. It hit the first one right here in 08. It hit the second one down here about 2-3 weeks later. Okay? It hit the third one about a month after that. It bounced all the way back up, pivoted, and then whoop, whoop. You thought it was bad right here, didn't you? You thought 07, 08 was bad. It was nothing. Remember I told you guys from October 08 to March 09, the shit really hit the fan? Well, it did. Okay, it did. And then you got one more buy area down here. How did you handle these markets? Okay? So now you know every buy area was triggered. And this is what happened after. This is what happened after. I took right there from 09, March of 09, we bottomed out. And this is what happened till 2022. I didn't put in the last few weeks. We'll get there. How'd that work out for you? How'd that scaredy pants mentality work out for you? How did flipping your finger to Wall Street, how did Occupy Wall Street work out for you? How did you cursing, I don't know, Jeff Bezos, Bill Gates, Mark, how did that work out for you? Like an idiot. They sat there and go, "Ooh, baby, the water is fine. Come on into the hot tub with my Cristal." No, you can't even afford beer because you were so smart you took all your money out of the markets. You know how many people did that back then? For anyone that was around back then, for any of you being honest and objective, do you know how many people literally said, F Wall Street, those crooks, those scumbags, those assholes? Who's laughing now? The opportunity was there for you. They didn't deny you this opportunity. They did not deny you this. You denied you this opportunity. They did not. So what happened? You were scared. And during that time, you probably didn't add much either. It wasn't like you had to get in at the bottom of 09. You could have gotten in 2012, 13, 14, heck, 16 to now. Still, triple, quadruple return. 2016 to now. Okay? Now, let's take a look. You can put any number you want on this. I don't care. I want you to take a look at something. Let's say you took 100 grand. Now, I understand. Not everybody has $100,000. Some people have 10,000. Some people have 100. Some people have 10 million, 100 million, a billion. I just chose 100,000. You could take zeros off it. You can add zeros to it. Doesn't matter. The point is the same. Let's say you took $100,000 and you divided it into 4 lots, quarter lots, $25,000 lots each. And you bought at every one of those buy points that I showed you. You put 25 grand into the Qs, the NASDAQ 100, at every buy point. You drew a line on a chart, and when it hit that line, you set your Vanguard account up, you set your trading account up, and you said, buy at this. Just, you're bidding, you're auto buying. 520 shares at 48, 568 shares at 44, 609 shares at 41, and 735 shares at 34. So $100,000 gave you 2,432 shares with a cost average of 41.75. That's it. You'd own 2432, cost average is 41.75. The Qs peaked at 408.71. During that peak 6 months ago, your shares would be worth almost $1 million. 10 times the return on your money in 13 years. 10 times the return on your money in 13 years. Guys, most people hope their money doubles every 6 to 7 years. To make 10x in 13 is obscene. So if you didn't, it's not the market's fault. It's your fault. How about all the people that sold out? How are they feeling now? Not to mention, it's right, not to mention if you have an auto debit on your account, Jordan, and you add every month. Okay? So the point simply, Brian, take it up to 2020. Let's go back. Let's go back, Brian. Brian, you said after the money printing began in earnest, the slope of the curve. Well, let's cut it out. So your cost average is $41.75, Brian, and you got out at $200. 5 to 1's not good. 500% in 10 years is bad. Is that what you're trying to say? To be fair, I'm not trying to be a dick, but to be fair, 500% is just not good enough. You're right, because you're like, well, there's not much I can say to that. Your cost average is $41.75. $200 is 5 to 1. Just saying. Me too. I'm just saying. 500% in 10, 11 years is amazing. It's not good. It's obscene. That's how good it is. Just saying. Okay? Nearly a 10x return on your money. What are you so scared of? And here's the best part. It's not the best part. Here's the best part. Oh, wait. It's not the best part. Some of you who took professional wealth building. All right? Some of you who took professional wealth building saw this. How in the world did the participation level in the markets go down and stay down during that time? How did that happen? Okay, we get it. People were broke in 2008. So they got out of the market. They cashed out. Well, one, why are you cashing out when the market is getting hammered? You take as little money out of the market as you possibly can. You get a second job, a side job. Yes, even for retired people. If you're willing and able to work, get a side job so you don't have to sell investments down 40%. Because it's not a good thing to do. And then the problem is, it stayed here. It stayed here for 10 years. We barely moved back up to 55%. So in 02, and guys, let's be fair, 9/11 happened at the end of 01, right? The market still got hammered in 02 and 03. So why is it the participation level didn't tank after 9/11? Stayed that way for 7, 8 years, and then ba-boom, and it stayed down here. So while most Americans should be jumping into the market, they are getting out of the market. Why? Remember when I said earlier, people do the wrong thing most of the time? They get out when it's at the bottom and get in when it's at the high? Do you understand where I'm going at with this? The statistics don't lie. I'm not making this shit up. They curse the market when they should be honestly buying into the market. As they're cursing Wall Street, Occupy Wall Street, they should be buying up as much of Wall Street as possible. Who cares what Wall Street does? Because if Wall Street does what they always do, what do they always do? They always find a way to make money. And most of the time, not always, most of the time that means stocks going higher. Piggyback the whale. Don't jump in front of it. Piggyback on the whale. Be that little shrimp hanging on a shark, right? Those remora fish or whatever the heck they're called. Exactly right, Sam. It's such simple advice, but yet so few people take advantage of it. So that brings us to today. All the people logged out before this, you missed the important part. This is where we are at today. What are you doing about it? What y'all doing about it today? Okay? Right here? Right there? It's a buy opportunity. That's a pivot. There's your buy. There's your first buy opportunity. Your next buy opportunity is this little pivot or this little bit. Right in this area. Note, I always tell you it's a range. The 300 area could be 310. Well, we hit that area. Okay? Where's the next area? Right around 255, 260. Right here. There's another pivot right there. Next buy area. We're getting close. We're getting close. And then, just like we did back in 08, there's that one big chunk that goes lower. So we have a couple close buy areas, 2 or 3 close buy areas. Pivot here, pivot here, pivot here. The next one's the monster one. the 170-ish area, the COVID area, the COVID drop area. And don't kid yourself. It's very possible we see that area. I know you think it's not possible. It's very possible. So what you doing about it? I mean, I just read a bunch of articles that said over the last 2 years, the average American savings rate is up like 10%. Average American saves like 4 to 5%, and it was into like the 12 to 15% the last 2 years. So don't tell me you don't have the money. Savings are way up. You couldn't do anything for a year. You couldn't leave your damn house, especially if you lived in California or New York. I mean, unless you're the governor, and then you couldn't leave your house. But anyway, so what'd you spend your money on? Are you still spending it on Nikes? Still spending on that new iPhone? Still paying over MSRP for your new car that you have to have? BS. This is where true wealth lies. This is where true wealth is. This is where real money happens. Not in that new car you paid over MSRP for, and the salesperson treated you like crap because they're like, take it or leave it. If you don't want it, the guy has 10 people behind you. What are you doing? What are you doing? So when the shit hits the fan, which is going to happen, it's an inevitability. What are you going to do about it? Everywhere I go, there's jobs down the street for $20 an hour, $25 an hour. Shit, Target's $22 an hour. Don't tell me the money isn't out there. Get a side hustle. Save yourself up a few grand. Put it in the market. Oh, I work hard, Jared. I put in 45 hours a week. Wow. Yes. You're God's special child and you work your ass off. You know what 12 hours is? A half day. It's a half day. Don't give me your crap. You are in the greatest opportunity in the history of the world. There's never been an opportunity in the history of the world as good as America and the American stock market. And you are in one right now. And most of you are going to sit back and get it up. I was going to use that word, but I'm not going to. You're going to mess it up. You're going to mess it up bad. That's right. It's okay, though, Dave. 5 or 10% of the people listening will take advantage of this. The other 90 will be complainers and victims in 5 or 10 years from now. Guys, the market could be bad for 3 years. I don't know how long it's going to be bad. But you know what I do know? It's going to bounce. It's going to bounce. It's going to bounce. I put my life on it. Whether it's 1 year from now, 10 years from now, or 20, it's going to bounce. Are you going to put your money in up at 400? Or are you going to put it in at 350, 300, 255, and 170? Okay? What are you going to do? Well, then don't do it, Braden. Right? Just don't. Just sit back and don't do it. So, but the Dow is at 64 in 1921. The Dow peaked at 36,799 on January 4th, 2022. That's strange. That's kind of a small difference, 64 to 36,000. That's a 575-fold increase. Where is it going to be? 10, 20, 30, 40 years from now? The most reasonable answer is higher. So why aren't you doing anything about it? Why aren't you selling a bunch of crap that's in the back of your garage right now? Maybe you can make $1,000 on that stuff. Maybe you can make $5,000. Most people have a lot of crap around their homes that's useless and they don't need. Throw it on eBay. Have a yard sale. Put it on Craigslist. I don't know and I don't care. That's on you. Find a way to take advantage of these 2 to 3 times in your lifetime opportunities. And no, a 20 or 30% pullback is not that opportunity. It's going to get far worse. It's going to get much worse. Buy it all the way down. Okay? For a long-term investment, buy it all the way down. Okay? Guys, the market always goes up. I said this in wealth building. I took 3 slides out of the 300 in there, so don't be upset. Oh my gosh, Jared took 1% of the slides out of wealth building. Oh. I get emails about this stuff. Okay? Over time, it always goes up. So stop whining about it. Don't be the fool that took their money out of the market and back in 2008, the first sign of trouble. If Wall Street was a common mantra. That was 6,500 back then. What is it today? What's it today? Do you think those people regret their decision? I don't know. Maybe their ego won't let them regret it. I don't know. But the average person is constantly behind the markets, right? Don't listen to your neighbor, your Uber driver, anyone else, man, some hot tip. Just buy the market. Total market funds, low fees, and this works in your trading account too. If you want a core trade, use a monthly chart. Draw your trend lines. Draw your support and resistance lines. Okay? This is opportunity. And guys, if you think I'm kidding or lying about any of this, here's the numbers. Investor performance in green, S&P performance in blue, performance lag in red. This is the average investor versus just the basic market. Just buying a SPY ETF. Just buying the QQQ ETF. Just buying VTI, Vanguard Total Market Fund. Buying VTSEC. This is the average investor over the last 30 years. 30 years. Let's take a look. It gets worse for investors the longer period of time. So the average investor is somewhere around 6 to 7 percentage points behind the market average over a 30-year period. Do you guys have any idea how big of a deal that is? Do you have any idea how big being 7% behind the market is over a 30-year period? The average investor is getting somewhere around a 4% return. The market's getting around a 10.5% return. Wow. Wow. 4% barely beats inflation. Inflation's roughly 3%, except for right now. Don't worry, it's just transitory. This will pass too. Unless you believe Janet Yellen really doesn't know anything about the economy and didn't see that coming. And who is the Fed chief? Jay Weil just came out the other day. Yeah, we misguided this one. Really? You expect us to believe that crap? This is what you do for a living? Your hand and pulse is all over the market, and you mean to tell us you didn't know when the average person walking down the street knows how bad inflation is? You didn't? Bullshit. It's planned. For whatever reason, it's planned. Okay? Point. 4% barely beats inflation. 10% retires you early. 10% retires you at 50. 4% barely beats inflation. Yes, that extra 6% you're missing out on is a very, very, very big deal. Market Watch. There's another article. Opinion. Americans are still terrible at investing. Annual study once again shows. The average equity mutual fund investor underperformed the S&P by 4.7%. The broader market got almost 12%. The average equity investor return was 7.2%. That's during good times. This was from 4 or 5 years ago. Let's go back to the last slide just so we can see it one more time. Do me a favor, just for you guys. Just do it on your own time. Go, DuckDuckGo, Google it. Compound interest calculator. Okay? Don't do anything, but just put in $100,000. Don't even add money to it. Just put in $100,000 and do 30 years at 4% and do 30 years at 10%. Tell me what the difference is. If anyone wants to do it now, go ahead. You don't have to. Do it later. 30 years at 4% compounded, 30 years at 10% compounded. I bet you the difference is like 10 to 1. It's probably like 7 to 1 in terms of how much more money you'd have. I'm going to say 7 to 1. I don't know the exact number off the top of my head. Okay? You want to go? So it's 5 to 1, roughly. 324,000 versus 1.5 million, okay? 1.7 million, whatever, okay? There it is. 5 to 1. It's kind of a big deal, 4% versus 10%, isn't it? And it's actually 4 versus 10.49, 10.5, but who cares? Over the past 15 years, 92% of hedge funds underperform the market. So the pros aren't doing any better. Right? The people you're paying all that money to, 1%, 2%, 20% of your gains. 1 year, 64% underperformed. 10 years, 85. 15 years, nearly 92% underperformed the market. The last 15 years is one of the greatest, call it last 10 to 12 years. 13. The last 13 years is one of the greatest 13-year periods in market history. Statistically, one of the top 2 greatest 10, 12-year runs in market history. How do you underperform that? It's shocking. we're back to this. You want to do a little fun exercise? Where was the Dow when you were born? The year you were born, where was the Dow? Where is it today? Do it, just for fun, just for shits and giggles. So when you look at all this stuff, what's keeping you from this? Why? What's stopping you? Are you scared? You shouldn't be lacking money. I mean, every metric out there says Americans have saved a bunch of money during COVID the last 2 years, right? The most money they've saved in a long time. I should have put it in here, but I have a savings rate chart for the average American, and it literally jumped from 4% savings to like 12 to 15% savings. So that can't be it. So what's your excuse? Are you fearful? Guys, I have a few friends that are hedge fund managers. When do you think they get the most new clients? Does anybody know? When do you think hedge funds get the most new clients? Any guess? During market pullbacks. No. Why? Because all they do is circle jerk each other. They leave one fund and go to another. They have a bunch of redemptions, right? They have a bunch of redemptions because the fund they're in isn't doing well. So they're like, well, shit, I better move my money to another fund. Okay? One of my best friends manages, it's not a huge fund, it's only about $400 or $500 million. Okay? And he's like, Jared, I don't even know what to do right now. My phone is ringing off the hook. Off the hook. People wanting to invest in my fund. It's like, why? He goes, they're just moving money from other funds that aren't doing well. He goes, we're losing money this year. We're down 6%, but the market's down 20%, so they look at us as a winner. And he tells them, he flat tells these people, don't take your money out at a 35% loss. What are you doing? That's a loss you'll never recover. Or if you do, it's going to take you a long time. So people constantly pull their money out at the wrong time. I mean, if I could, I don't want, not to break a fiduciary responsibility. If you could talk to some of these people, if you could hear, if you could be a fly on the wall in some of these meetings at hedge funds with investors. Now remember, to be a qualified investor, you need a couple $1,000,000. So these are generally people that have done all right in their lives. Most of them are worth $10, $20, $50 million that are invested in most of these funds. What am I getting at? That these are not stupid people, but they're stupid when it comes to the market. See, in their field of expertise, say they own a construction company, maybe they own a restaurant. They're very good in their field, but when it comes to the market, they're emotional. In fact, I've been told this many times from hedge fund managers. I am not a stock picker. I'm a psychologist. That's all I am, as a psychologist, because when these people come in, it's like you have to sit them down and give them a binky and a blanket. They need to be coached through everything. That's how emotional people are with their money. You see, when it's in their business, in a restaurant or a construction company, we talked about it, they feel good. They're confident. They know how to fix something when it's broken. But when it comes to the market, they're scared. And that's where the average person is, the average American is. They're scared. So most people are taking their money out at the bottom and putting it back in at the top. We've already looked at the cycle of greed and fear, right? Professional trading strategies. So change your paradigm. If you don't change your paradigm, guess what? You will be like the other 90% of people out there chasing the market all the time. You'll be just like everyone else. And you know the phrase, the saying, if you keep doing what you've always done, you'll keep getting what you've always gotten. Break that cycle. Break it. Right? Break that cycle. Take the market and buy some on the way down. When you're trading this market, know we are in a downtrend. We are in a bearish market. So when you see a bounce, don't expect that bounce to continue. We're not in an uptrend. So I'll relate this to trading. Okay? When you're in an intraday trade on a 5-minute chart or a 10-minute or 15-minute chart, and you see a little bounce in the market, more often than not, that bounce will be sold into. Sure, there will be days where the market's green. Of course, there will be days that this happens. Of course. But more often than not, 75-25, like yesterday, every time the market tried to bounce, sellers came right back in and sold it off. Every time. You're going to see way more of that in a bearish market. Get used to it. Change your paradigm. And I understand it's challenging because for 10 years, all you've known is a market that went straight up. For 10 years, that's all you've known. So for you to take this last 6 months and watch the market pull back 20 or 30% is a little bit mind-bending for you. Change your paradigm. We are in a bearish market, one that's likely going to get a lot worse. If it doesn't, then you bought some at 350 and you bought some at 300. If it does, you'll buy more at 255 and more at 170. You can do this with the SPY. You can do it with VTI. You can do it with the IWM. Draw your lines. Guys, do you guys remember the last time I did a lecture similar to this? Does anyone remember? I do. April 2020. Go back. Tell me I'm wrong. I have it in my files. April 2020. Why? Because the market was shit in the bed. Look at the levels. You could have bought the market. I did a lecture on this. There was 4 levels that I drew back at that point in time. Okay? 4 levels that I drew back at that point in time. In fact, I should have put that slide in. That was dumb of me. I should have put that slide in. We didn't hit all 4 levels. I think we hit 2 of the 4 at the time. Feeling pretty good if you did some of that. You're not even close to those levels. Right? There's the Dow. I only went back 45 years or so. I didn't feel like putting back as old as most of you are in here, which is way over here. Okay? This is the Dow over the last 45 years. 820, 840, 890. My goodness, I mean, we're at what, 30,000 right now? So unless you were born in the last 18 months, the Dow is higher than when you were born. Now, I know for some of you, you need to put a 6 there, a 5 there, a 4 there, a 3 there, a 2 there, whatever. Okay, 1968, 58, 48, 38, right? Sophia knows. All right, but my point simply is, be smart. Don't sell at the top and don't buy at the top and sell at the bottom, guys. It's just not, it's not the way to do things. Okay? You guys need to do with your money what you think is best for your money. But historically speaking, the market always goes up. Now, is past movement an indicator of future movement? Blah, blah, blah. Yeah, no, it's not. Okay? But if the market tanks, goes down 90%, so will Apple, so will Facebook, Amazon, Google, all the largest companies on the planet. Okay? And we won't have an economy and you won't have to worry about it. I'm not kidding. You won't have to worry about it. It'd be like 12th century. You won't need an iPhone because it won't work. Okay? So, point, get smart. This is an opportunity, not a time to run for the hills. That's the basic thing I want to leave you with. This is opportunity. This is what opportunity looks like. See, most people think opportunity looks like this green stuff on the way up. No, opportunity is here. You get some of your best deals when others are struggling, right? Another person's loss is your gain. When do you get the best deals on houses, on cars, on anything? When that person has to sell, when they're struggling. It's unfortunate, but that's just the fact of the world. They didn't make as good of a decision as you did, so you're taking advantage of their bad decisions. Yes, I understand, people, because I'll get emails. There are some unlucky people, yes, but you guys tend to think that that unlucky describes 90% of the people out there. It does not. It does not. Okay? Most people are where they are because of choices and decisions they have made. Good or bad, most people are where they are. 75% of people are where they are because of the choices and decisions they make. Okay? Not because of bad luck. Everyone gets a little bit of that in life. It's just the way the world works. All I know is right now is opportunity time. opportunity to get a side hustle. I know people working at nice restaurants that are making $1,000 a night. I'm not joking with you, a night. That's how busy restaurants are. People are spending money like they're going to die tomorrow. That's how crazy people are spending money. It's June in Arizona, guys. No one's here. It's full. It's busy. I tried to get a reservation at a restaurant a week in advance, and I had to take a crappy time slot because it was full. Everywhere you go, there's help wanted signs. I'm at Home Depot the other day. The guy goes, man, we are really crazy short-staffed. It's going to take a few minutes. I apologize. They're all paying over $20 an hour. So there's opportunity out there for the people who are willing and want to take it. And the market right now, in my opinion, is one of those places and one of those areas. Okay? It's one of those areas. So you take a look at all that. What did you learn? I hope you learned the basic premise. When there's blood in the streets, buy. You've heard it, the real estate mantra. When there's blood in the streets, it's time to buy real estate, right? It's time to buy stocks. We are in that phase right now. Okay? We're in that area where the markets are pulling back, and I don't think we're finishing this phase. I think we're just getting started. Okay? So, guys, I'll leave it at that, all right? But for those of you that are regulars in here, I do these every week. For those of you who are not, I do these every week. Because this is nothing. I mean, Professional Trading Strategies is 625 pages in 20 hours. Professional Wealth Building Strategies is 300 pages in 10 hours. Right? This is just a little tip in the bucket. All right? We generally talk a lot more about trading specifically. But today, with the markets being where they are, I don't want you guys to miss this opportunity. Right? I don't want you guys to miss this opportunity in the markets. Right? Whether we bounce here 30% down or we go down another 30%. All right? Break the cycle for yourself and your family. Break the cycle. I mean it. Break the cycle. Stop being like everybody else. You don't want to be average. The average person is broke. The average person is broke and they're terrible with money. Don't be average. Be better. Be better. Okay? So, I hope you guys enjoyed this lecture. I'm Jared Wesley of Live Traders. We'll get back at it again next week.